So now let's look at the global ETFs that are available. So there are so many global AI ETFs that are available in the market. So right from BOTZ, ARKQ, and global X Robotics to tracking through the Bloomberg AI Valuation Index, there are multiple AI ETFs that are available. So is there any option available in India? So do we have an AI ETF in India? So let's get into it. So what are all the different ETF options available in India for tech companies? So the first one is Motilal Oswal Nasdaq 100 ETF. So this company invests in Nasdaq 100 stocks. This is not a direct pure play ETF. So they have exposure towards some of the A stocks, but they invest in top 100 Nasdaq stocks. So this is a fully diversified tech ETF. It is not a direct AA ETF. So there may be some thematic mutual funds focused on tech, and then we also have Parag Parikh Flexi Cap, who invest 30+% in US companies. So out of which it is mostly the big seven. And this is also not a pure play. So is there any pure play company ETF that is available in India? So there is. So this is the one question that is there. So if something is there, it is very much simple and easy to invest your money over there in an SAP and keep playing this theme without sweating too much on researching about stocks. So is there any answer? Does anyone know the answer? So there is only one pure play ETF that is currently available in Indian market. Let's see what it is. So it is Mirae Asset Global XA and Tech ETF. This is a fund of fund. So this directly invests in another fund called Global XA and Technology ETF, which is from Mirae Asset. So Mirae Asset is a global company. So they also have a company in USA. So in US they have this Global XA and Tech ETF. So Mirae Asset is a reflection of that ETF. So they simply what they do is this is a fund of fund. They simply invest the money that you give it to this ETF over there. So let's look at more details. So Mirae Asset is an India-friendly global AI exposure ETF. So it allows Indian investors to basically invest in the AI theme. So this does not cover Indian stocks. All the top US stocks will be covered here because they directly invest as a fund of fund. So you do not need a brokerage. You do not have to send money. You don't have to do LRS. You don't have to convert it into dollars. So all these things are basically avoided here. So since it is a fund of fund, it almost invests 100% into the global XA ETF. So the trend is positive for this sector. So there is a long-term growth which is very strong. So this was launched in 2022 September. So since then, the company has been the ETF has been doing really well. They have delivered exceptional returns. So we'll look at those details. So all the historical data is looking good for Mirae Asset. So the expense ratio is only 0.26%. So this includes fund of fund, but it is still competitive when compared to other similar tech ETFs. So this is a fully international and unhedged currency exposure. So it carries a lot of thematic risk. AI theme, if the AI theme does not go down well, this can be a big loss. And again, if INR continues to depreciate or appreciate, all these currency fluctuations can result in poor returns. So overall, if you look at it, this is a high risk, high reward opportunity. So it is classified as very high risk. So it is suitable only for investors who have long-term investment horizon and at the same time who has the stomach to bear certain risks and go through certain phases of uh, notional losses. So let's look at the pros. So easy international AI exposure for Indian investors without spending any time on US brokerage or remittance to dollars, converting INR to dollar. None of this headache is going to be there for you. So it is a highly thematic pure AI fund. So investing 100% in global XAI. and it is globally diversified. So there is an exposure towards US companies as well as international AI companies. So this company does not just invest in US stocks, but there are a lot of interesting AI companies available in China, Taiwan, Ireland. Take any country into effect, Korea. So there are so many AI interesting companies that are available there. So this fund invests across all these international AI companies as well. So across the value chain, right from chips, cloud infra to software. So currency hedging, as I said, is a risk. This is a thematic fund. So typically theme-based funds always carry a lot of risk because either it is already priced in or the theme may not play out. So if any of that happens, then what happens is you may not get great returns. Even there are some instances where you may even lose some of your capital. So the primary challenge here is the theme has to play out. If you are very confident of the A theme to play out over the next 3 to 5 years, then this can be considered, but still it is a high risk bet. Uh, so this is a fund of funds, so it adds another layer that carries both the underlying ETF as well as the expenses of Mirae asset, but still it is modest overall. So let's look at these numbers. So AUM, they are managing 300 crore right now. So it is a small fund, whereas the fund of fund, the Global X is managing more than $3.6 billion, which is massive. So in terms of AI theme purity, this is 5 out of 5. So management style is passive because this is fund of fund. So the focus segment of this fund of fund is robotics plus AI. So this is a theme where the fund invests in companies. So this was launched in 2022, just before Generative AI was launched. So beta is 0.19, which is good. So the Sharp ratio is 0.94. It is not bad, I would say. If it is better than 1, it is good. It would have been ideal. And 0.94 is still decent. So decent returns against the risk we are taking. So alpha is really good. 21.89 is way higher than any other theme. So if you go to traditional mutual funds, large caps, small caps, you would not get such a good number. So standard deviation is not available since it is a small fund which has been launched recently. Trainer ratio is 1.2, which is again good. Anything above 1 is good. Expense ratio is very minimum, 0.26%, which is again a good thing which can improve your returns by a few percentage points. So what are all the top holdings? Nvidia is there, Netflix is there, Samsung, Palantir, Meta, and then to play the network theme, Cisco is there, Broadcom is there. So this contains a mix of hardware as well as software companies, which looks really good. So all these companies will continue to do well if the AI theme continues to grow. So let's look at annualized returns. So 25% 1 year return, which is phenomenal. So it's been launched 2.75 years back. So 27.86%. Since inception, it has given it around 32% CAGR. So phenomenal returns for a less than 3-year-old ETF. So the returns are mind-boggling. But still, yeah, this we don't know if this can continue. So the category returns are minimal, 6.2% and 20.9%. So the company CTF is really beating all the other category funds. This is definitely an interesting opportunity if you are a believer of the AI theme. If you think that AI as a theme will continue to grow really well, then this can be an interesting ETF to consider so that you can have some exposure in your portfolio through this ETF. If this theme plays out well, they may continue to give very good returns. So again, this video is for educational purpose. So please do your own due diligence before investing. Let's look at the next fund, AAQ. So Global X AI and Tech ETF. So this is the fund in which Mirae Asset is investing. So the fund of fund. So they have broad exposure across the entire value chain: software, companies are there in the portfolio. Semiconductor companies are there. Big data is there. Chip manufacturer is there. So they have a strong balance between enterprise and consumer AI apps as well. So the focus is on both AI beneficiaries as well as AI creators. So the infra layer they cover, the semiconductor layer they cover, data center layer they cover. They also cover the AI beneficiaries, AI use cases that are used across verticals and industries. They also focus on the data layer as well. So who can invest in this company? So it is ideally good for investors who are looking at AI exposure without any extreme. So it covers AI infrastructure as well as SaaS models. So it is a balanced thematic fund with decent diversification across tech. So it is well balanced across AI hardware as well as software. So it is an established fund house with a solid track record. It has a good blend of stability and innovation. So in terms of negatives, high concentration in top tech names. So it may lag in specific high growth AI niches and the premium fee when compared to generic tech ETFs. So Mirae asset is running at $3.6 billion. So AI theme purity is 5 out of 5. So management style is passive. So the focus segment is in broad AI tech. So it was launched in 2018. So it has a significant history and track record. So let's look at the numbers. So beta is 1.23, which is good, and it is lesser than the category average. So this is good because it is less than the average. So Sharp ratio is zero point 0.8, which is again pretty decent for a 3-year number. Alpha is really good, 7.1. So compared to the category average, they are giving strong returns. So standard deviation is also a little less. So trainer ratio is high, which again means that this is pretty decent, and expense ratio is high, which is 0.68%. So in terms of country, you can look at it here. US only constitutes 68%. So there are stocks from China, South Korea, Taiwan, Germany, Ireland. So there are so many AI companies across the globe. So all of them are present in this portfolio. So Tencent, Nvidia, Netflix, Palantir, Samsung Electronics, Broadcom, AMD, Taiwan Semiconductor. So all the interesting companies are present here across the entire value chain. So this is a very interesting one. Let's look at the annualized returns. So 1 year 21.71, which is good. 3 years is 25.54. 5 years is again 16.76, which is far better than traditional mutual funds, which would give you lesser returns. So compared to the segment average, again, this is their returns are far better than the category average, which means that this fund seems to be doing well. So the next one is bots. So bots is focused on not just AI, it is also focused on robotics and automation technology. So basically anything related to manufacturing, healthcare, retail, hardware related, factory automation, healthcare robotics, autonomous systems. So they have global exposure across developed markets with high investing. So next advantages, it suits investors who are looking for a long-term transformation in labor and manufacturing. So any innovation within AI and robotics across the manufacturing, labor, hardware division. So this is where this company is specialized in. So this is more industrial than digital AI. So instead of focusing on software companies, it is focusing on the manufacturing industrial companies as well. So if you're looking for hardware driven AI disruption, if you are a big believer of it, then this ETF may be a good option to consider. So it is a pure play robotics and automation theme. So it is globally again diversified across industrial sectors. So it has a passive approach, which transparent methodology. So the cons, heavy reliance on industrial hardware, less software focus. So it can underperform in tech rallies driven by AI software. So if AI software companies keep rallying and Nasdaq constitutes a lot of companies like that. So whenever they rally, this may not rally because this is primarily into hardware manufacturing and industry. So global manufacturing cycle, in case if Europe heads into a recession, if there is a manufacturing down cycle, so all of this can affect the growth of companies present in this portfolio of this ETF. So Global X is the funder. So phenomenal AUM, $2.7 billion. So the A theme is just 4 out of 5 because this is primarily focused on robotics plus AI. Launched in 2016, strong track record. So beta is 1.48%, sharp ratio is 0.29. So alpha is bad, minus 4.55. So basically, this is investing in companies that are very, very innovative, that are disruptive with a VC mindset. So some of these companies may not be performing for a long period of time, but suddenly if they are able to deliver or if they crack a few customers, they'll grow in a disproportionate manner. So that is why you would see that the numbers are poor in terms of metrics. So standard deviation is relatively high, trainer is decent, high expense ratio of 0.68. So the holdings, Nvidia, ABB is there, Intuitive Surgical is there, so which is into healthcare and managing surgery. So Dynatrace, DaFiQQ, Pega Systems. So this is an end-to-end robotics and AI ETF. Returns are mediocre. So 9.3% 3 years. So when compared to index, it is low. Again, 5 years it is 6.22. Index is better. Since inception, again index is better. So let's look at the next ETF, which is WISE. So this is a pure play on the generative AI boom. So we have been discussing a lot about the generative AI theme. So this is one ETF which is really focused on a specific theme, which is our focus point as well. So LLMs, creative AI agents. So these are the focus areas of WISE. So they target companies developing or commercially deploying generative AI tech. So they are capturing early stage themes. Companies like converting text to image, text to speech, AI copilots, building foundational models, etc. So this is suitable for aggressive investors who are looking at exponential productivity gains. So this is one of the few ETFs which is positioned around a narrative innovation. So high thematic focus, but never and but this is new and very highly volatile. So it is tailored to the generative AI boom, focused on bleeding edge themes like LLMs and foundational models. But it is a high thematic purity for targeted exposure. So high volatility from startup heavy holdings. So that is one negative. So the AAM is still small. So limited historical performance data. So theme ETFs. So only $0.06 billion AAM, which is very small. But it is a proper pure play AI theme. So 5 out of 5 we can give. So active management. Focus segment is generative AI. Launch year is 2023. Very young company. Since it is not even 3 years, we do not have any of the ratios like beta, alpha, etc. So what we have is expense ratio, which is relatively low at 0.35, which is good. So top holdings, again, you'll see AMD, Nvidia, Microsoft, Amazon. So AI use cases used by companies like Amazon. So Apple is there, Intel, Broadcom. So Google is there, Gorilla Technology is there. So it plays around the entire generative AI theme and the holdings look very promising. So returns 17% in 1 year, 26%, 26.5% since inception. So but when compared to the index, it is still a little slightly low. But overall, the numbers are very good. So 26.51, 17.39 are mind-boggling returns for a normal investor. So next one is Robo Global Robotics and Automation ETF. So balanced exposure across industrial, medical, and consumer robotics. So it has an equal weight strategy. It gives room for even mid cap and small cap AI disruptors, so which is very interesting. So this one is designed by robotic specialists. So this is a global robotics and automation ETF. So the domain alignment is high. They know clearly what that particular company will do, and then based on that they invest. So they are again diversified beyond US. So it is good for investors who are looking at steady robotics evaluation, not just big tech. So it combines hardware, software, and enabling infrastructure. So broad robotics exposure. So industrial, medical, retail, manufacturing, consumer, etc. So there is an inclusion of mid cap and small cap companies. So basically, you'll get some diversification. But again, the risk is very high because all these companies are R&D driven, innovative, and do not have significant revenues at this point of time. They may be burning cash, but they may be valued at higher price points at this point of time with the anticipation of their R&D department coming good. But imagine if it does not work out, so some companies may not do well. So this is again a high risk, high reward fund. So it is thematically focused with global reach. So expense ratio is a bit high. So the sequel limiting may limit back big cap upside. So the upside may be limited because of equal weighting. So it may lag pure play tech or AI software trends because it is focused on robotics. So Global X, $1 billion plus. So 4 out of 5 we can rate it in terms of AI theme purity, management style is passive. So the focus segment is robotics. So this was launched way back in 2013, 12 years back. So this is something we do not have to worry at. We have to only look at the annual performance. So let's look at the beta. Beta is 1.44, categories just 1.18, which is pretty decent. So Sharp ratio is 0.07%, again better than category. Alpha is where the company is mm, not doing well. As I mentioned earlier, the returns may be lumpy. It is dependent on a lot of small and mid-sized disruptors in the robotic space. If they manage to capture market share, if they suddenly grow, it will be phenomenal growth. So since they have a lot of lumpy assets, returns may be here and there. You can see that from the standard deviation. So trainer is also negative, which is again a negative thing. So 0.95% expense ratio, which is again another big red flag. So holdings, Intuitive Surgical, Samsara, Yokogawa, Rockwell Automation, etc. So lots of small and mid caps, interesting companies. So returns, yeah, though it is not great, still decent. 8.52, 5-year CAGR of 7.24, which is just above returns coming from bonds. So this is a high risk, high reward theme. So the next one is the most popular of them all, ARK Autonomous Technology and Robotics ETF, ARKQ. So it is actively managed, high conviction bets on disruptive innovation. So it covers multiple areas beyond traditional AI. So across autonomy, drones, 3D printing, and space exploration is also there. So it emphasizes future applications over current profitability. So the returns again may be lumpy. So it is suited for long-term risk tolerant investors. So it may have high drawdowns, but equally high upside during tech cycles. So ARK has a strong brand in thematic ETFs. So the money will keep coming in terms of AUM, it can keep growing. So the advantages are they are actively managed with high conviction picks. So they have access to disruptive sectors like autonomy, drones, etc. So there is a strong upside potential in bull cycles. So in terms of cons, high volatility and drawdown risk. So premium expense is very high. So more than 0.7% is extremely high. Underperformance is very much possible in bear markets because whenever the markets are up in a bull market, tech stocks can keep growing crazily. So there is high volatility. If there is an underperformance, it can be very much possible during bull markets. So fund house AUM $1 billion plus. So you'd rate it 4 out of 5 in terms of AI theme purity. So management style is active. So focus segment is autonomous tech. Launched way back in 2016. So beta is better than the category. Sharp ratios lesser than the category. Alpha is again poor when compared to the category. Standard deviation is higher when compared to the category. Trainer ratio is less. So expense ratio is 0.75%, which is again very high. So let's look at the holdings. So primarily into US, 88.78%. So top 5 holdings include Tesla, Nvidia, Amazon, Deere and Company, AMD Athlon, Iridium Communication, so Taiwan Semiconductor, Kratos Defense and Security Solutions. So they have a pretty decent lineup of companies in their holdings. So let's look at annual returns. Last 1 year, phenomenal number, 60%. 3 years, 18%. 5 years, 14.69%. Again, it beats the category average hands down. The returns are definitely good from ARKQ. So there are a few more ETFs that are available. Global X Robotics and AI. So this is a thematic fund focused on robotics and AI convergence. So it seeks to benefit from automation across industrial and consumer sectors. So it is a hardware centric ETF. The approach over software slash ML heavy funds. So structured as a passive rules based index ETF. So it is focused on companies enabling a infrastructure and those adopting it. So it includes everything from enterprise, mid-market, cloud platforms to integrators. So it captures every part of the AI revolution, primarily the infrastructure. So it combines stability of adapters with the energy of enablers. So it is ideally suited for investors who are looking for broad digital transformation plays. So broad digital transformation play is what ALA is focused on. So it is extremely thematic, but still slightly more defensive than pure AI innovators. So it focuses on AI enablers and adopters across industries. So it is less volatile than pure play AI ETFs. So balanced exposure to software platforms and integrations. So in terms of cons, so broad remit, it may dilute pure play AI gains. So that is one challenge they have. So this is a new fund with very less limited historical data, and the asset base is very small right now. So the expense ratio is 0.55, still on the higher side. Only $70 million AUM. So 5 out of a proper AI theme fund. Uh, Passive management. So focus segment is AI software enablers. So let's look at the companies. So 2024 it was launched. Again, very recently it was launched. So in terms of exposure, 78% in US and remaining 22% in rest of the world. So the same culprits are here: Nvidia, Microsoft, Amazon, Meta, Apple in Taiwan Semiconductors, Broadcom. So all of them are here. So annualized returns, 38.69% in a year. So compared to the average, this is far better than So the returns are really good. So there are still some more ETFs. AAS. So it is built around the belief that AI is entering a long-term super cycle. So this is not a 1 year, 2 year thing. So it is a 5 to 10 year theme. So that is the core ideology behind AAS ETF. So there is a thematic exposure across the platform from platforms, chip makers to application layer. So positions for long-term secular tailwinds from AI adoption. So it aims to capture AI's compounding efforts across all industries. So it is targeting a broad impact across the entire AI value chain, not just tech. Beyond that, across a vertical AI, like healthcare, logistics, media, etc. So this is one ETF which can be very appealing to long-term investors who are tracking the macro properly and are believing that AI theme can daily do well in the long run. So it is designed to leverage a long-term AI super cycle. So diverse across chips, platforms, enterprises. So it is thematic but broad enough to smooth volatility. So in terms of negatives, high fee, limited asset base. So young fund with limited performance history. Again, very high expense ratio, 0.75%. So, so this was launched very recently. So it is having a focus segment of AI super cycle. So in fact, 2025 they launched. So top 15 holdings: Micron Tech, SK Hynix, some new names: Vertiv Holdings, G, Vernova, Marvelli Tech, etc. So the company only has 63% exposure towards US, and there are a lot of companies across other geographies, which is a good thing. Annualized returns are negative: -5, -10, 1.9, -4.9. So the returns are not great from a 1 to 3 year point of view, whereas in 10 years, the numbers look reasonably better. So the next one is XAIX. So we'll talk more about it in the next follow-up video about this ETF. We have some more exciting ETFs which have to be reviewed, and we'll also come up to a conclusion in the next video of the series.